Hong Kong has a lot of very well and long established institutions as well as systems that are going to make Hong Kong a very attractive place to conduct business.
Hello, welcome to the Yield TV. Today I'm talking with Nelson Wong, who is the head of Greater China Research at JLL, based here in Hong Kong. Nelson, great to see you here today. I just wanted to get your thoughts. We'll start things off with how has Hong Kong's property sector been performing in the first half? Obviously a very challenging year. Which sectors, for example, have been holding up okay?
Well, indeed, it's been a very challenging year. It's been a very challenging 12 months since the middle of last year. It's not a surprise that the property sector in Hong Kong has been under a lot of pressure and a lot of challenges coming up from a moderating economy, the social events, as well as the pandemic more recently. So we see vacancy rising and rents falling, most notably in the commercial sector. On the other hand, residential has been, especially on the pricing front, has been rather resilient over the last 12 months or so.
Have we seen a lot of cases of maybe companies withholding rent, defaulting on their rent payments? Is that a big problem?
We haven't seen or we haven't heard very many of such cases, but obviously a lot of companies, be it large or small corporates, are looking for ways to save costs. And indeed, cost-saving mode is what most corporates are putting on these days. And real estate cost is one area where they think they can more easily try to find some savings from.
And in terms of some actual numbers, are you able to put some figures on those things? You're saying that sort of, for example, office rents coming under pressure?
Well, office rents have dropped quite substantially in the first half. In the 6 months over the first half, central rents have already dropped by about 17%, and whereas the overall rents in Hong Kong over 6 months have dropped more than 10%. So as you can tell, the rental pressure is most obvious in central, but that downward pressure on rents is indeed happening everywhere.
Why do you think central's being particularly strongly hit?
A couple of reasons, really. One, obviously, rents in central is substantially higher than in other submarkets, almost 2 times or more than the other submarkets. And the other major reasons is that a lot of tenants are looking, when they are looking for viable, cheaper or more cost-effective locations, they move out of central to other submarkets, and therefore central is more vulnerable from a rental perspective.
I mean, the retail sector was obviously quite badly hit last year with all the protests, and as this COVID situation has been a sort of a double whammy. Can it recover from here?
It is a question that we will have to see going forward. Obvious, as you mentioned, the sector, especially F&B and really a lot of other more high-end retail brands are facing very serious challenges these days, mainly not so much, well, certainly the pandemic, but also because of the basically zero tourism arrival these days, and where their sales rely significantly on tourist spending. This is no doubt a very hard hit to them. But on the other hand, given the fact that many increasingly landlords are becoming more realistic and accommodative, we are seeing some brands, especially on the F&B side, are taking advantage of the more accommodating rental levels and come to Hong Kong these days.
Absolutely. And with the growth of online shopping that we've seen, caused by more people staying at home, spending more time online, um, is that going to be a long-term trend, do you think, or do you think people will be back in the shops as soon as they can get out and about?
I say it's going to be a bit of both. Obviously, long term, obviously the popularity of online shopping is going to stay that way. However, as you understand very well, Hong Kong is a small place. People do go out and shop. People do go out and, for social gathering or dining. And therefore, I think retail will still have a very special place for people in Hong Kong. But landlords as well as retailers will have to think very carefully how they are going. They will be able to bring the customers to the actual shop space, be it more experiential oriented, be it more attractive to all these customers.
And also with the growth of online shopping, we've seen a rise in sort of interest in things like data centers and logistics delivery sort of a property sector. What are you seeing in that area?
Data center has been a fairly popular investment proposition these days. And we've seen a few sites transacted lately, and those are all targeted to be developed for data center purposes. And it is rather natural, come to think of it, because of the need for increasing amount of data to be stored and to be taken care of. And so the supply of data center is relatively limited in Hong Kong, and it is just a way of addressing the rising demand in the market. On the other hand, logistics, while it is still relatively resilient, unfortunately, the trade tension between China and the West has taken a small hit to the logistics center, and we do see some operators downsizing their operations in Hong Kong. Although I would have to say this small hit is rather far from what we've seen in the retail and the office sector.
We've obviously got an election coming up in the United States in November. Do you guys take a position on what a Trump or Biden victory might mean for China-US tensions and what that might do for the property sector in Hong Kong?
Well, to be honest, I do not have a view. I think at the end of the day, the property market is going to be driven by the demand and supply dynamics locally. Although that that event ultimately will be determined also by how the economic situation is like in between the East and the West. So we'll have to see. But I think Hong Kong has a lot of very well and long established institutions as well as systems that are going to make Hong Kong a very attractive place to conduct business.
And not a lot of room here for building things. So there's always going to be that kind of pent up demand and lack of supply.
It is absolutely true. And this is true not only for residential, it is true for office and retail premises as well, data center, logistics facilities. Frankly, land supply is very tight in Hong Kong and for a very long time. So it is really not a matter of supply glut that we are facing. We always have a very tight supply situation in Hong Kong.
But you mentioned at the beginning the residential sector has been holding up okay. Could you put some numbers on those?
This is especially true in the mass and medium-sized segment of the market, which is really what the normal people or ordinary people would demand in terms of dwellings. Prices have been hovering at the historic high levels, and although there have been a lot of well, at least that's JLL's view, we've been expecting a drop of up to 15% or so in the mass and residential segment, but apparently that is much less likely, and therefore we have reduced our forecast of a drop from about 15% to 5 to 10% for the full year of 2020.
Why do you think it's holding up so well?
It's again back to the supply and demand dynamics. We've had a very long period of time where supply of residential units has been very low, just about 15 to 20,000 per year in terms of completion, and that lasted for a number of years. That's way less than what the actual need for housing is in Hong Kong, private housing I'm referring to. And therefore, this pent-up demand is still very high, and a lot of buyers are still very keen on to buy into this sector.
Because we've seen some of the new launches from some of the major property developers here. Long queues, people, properties selling out, developments selling out on their launch. So very positive in that sector, it seems.
I wouldn't say it is very positive. I'd say they're doing a very good job in terms of marketing and in terms of their pricing, which is right at the level where it can entice a lot of buyers to go to the show suite and put in down payment. Mind you, we still expect a moderate drop in price for 2020, and that's again because of the expectation of a moderating economy, a pretty poor economy in 2020, rising unemployment, potentially a lot more bankruptcies in the second half of the year. So we do see clouds looming around in the horizon, but all in all, this is still a much more resilient sector than the others.
And looking forward for the rest of the year and into 2021, I mentioned the election in the US, obviously, as a sort of key thing to look at. Any other key sort of drivers shaping the market as we move into 2021?
I think one thing we can look for is a relatively strong rebound from a very low base in 2020. So from a statistics perspective, we will see a lot of strong year-on-year growth in 2021. Although we don't think that we should be carried away by such a recovery, so-called recovery. We are hoping that the social situation in Hong Kong will be more stable come 2021, and as you mentioned, the election in November this year in the US, once it's over, maybe that will lend to a more stable political environment globally. That will all be conducive for a general recovery over the longer term.
Absolutely. So there's lots of sort of unanswered questions out there at the moment. But given that the market is in such a sort of depressed state, but with the expectation of a rebound in 2021, in terms of sort of deal flow and customers coming to you asking for, looking for opportunities, are you seeing a lot of interest in people trying to sort of buy now in an expectation of a rebound?
We certainly are aware of a lot of keen interest in investing in Hong Kong property. However, also a lot of such interest is to bargain hunt And at the same time, a lot of the so-called prospective sellers, while they are interested in realizing their asset values, they are not particularly pressed on the financing side or on the funding side. So it is very difficult to bridge that very wide bid-ask gap in the investment market, and the amount of investment transactions that we track is substantially lower than the same period of last year.
Mm-hmm. Well, that's been a very interesting look there at the market in Hong Kong. Thank you very much for all your insights, and it's going to be interesting to see things unfold over the next year or so. But thank you very much, Nelson.
Thank you very much, Leo.